Maverick traders, welcome out to your currency recap. It is July 1st. Nice to be here with you. So as we look at the markets, we're going to go through any interesting news, anything that's really driving currencies, driving crypto, driving these markets higher or lower, and we're always going to try to identify our very best pairs. What's moving, what has energy, where can we look for the next opportunity?
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of interesting in that although there wasn't a lot of movement, we potentially are coming out of a malaise, and we'll talk about that at the very end when we look at this equal weighted S&P chart. But let's start with the Supreme Court ruling that Trump was not liable for acts during the presidency. He immediately went to social media and cheered on that ruling. Of course, was in his favor. Equal weighted stocks, the S&P was down 1%, yet the S&P and the NASDAQ were positive on the day. We have 60% of stocks in downtrend. So are we trending up like the indexes suggest, or are we trending down? Well, that's tricky. The index is in an uptrend, but it's heavily weighted towards large cap tech, towards Apple, Nvidia, and so on. They're clearly in an uptrend, but the majority of stocks are trending down. So we have this bifurcated market. We have literally two things diverging, which one's right and which one's wrong. Those other sectors suggest that they're starting to price in some economic weakness, recession, and so on, whereas large cap tech is pricing in AI and revolutionary changes. So it is interesting. We really have these two sides of the market, two things trending in opposite directions. Now, in currency land, not a lot of movement today. Certainly, the euro was the strongest, up 0.5%. CAD was surprisingly weak, down 0.25%, given that oil was up sharply. Oil was the biggest mover in terms of commodities and currencies today, up 2.5%. I would have thought that CAD should participate a little bit better. It did not, but one day does not a trend make, but a little bit interesting that it couldn't have any upside. It actually sold off for the day. Crypto's been in a downtrend. They had a recent bounce. This is, as a trader, you tend to look in a downtrend to sell the rally. That would be my thought process. We talked about that last week, that on the rallies, you want to sell that rally, and this is probably the opportunity to do it. Some of those charts look really good as bear rally short setup. So what's the market outlook? Well, the index, here's the S&P 500. This is an uptrending chart, right? We're consolidating after a big run higher. We're above a rising 20 and rising 50. All roads look pretty solid, so the market's in great shape, right? Well, that's the problem. Again, about 60% of stocks are actually trending lower and below their 50. So the index is up, but it's up on the back of the large names, and if those show any weakness or these other sectors start to break down, this is going to follow. And the reason I think that's the case, you'll see in the chart here in a bit. This week we have markets closed on Thursday for the July 4th Independence Day holiday. So understand that there's not a lot that will happen on Thursday in all likelihood. That is certainly a day where I would not be interested in trading too much. It'll be helter-skelter, low volatility, low volume. Well, not necessarily low volatility, but certainly low volume and a lot of lack of liquidity in markets. But the rest of the week, we've got some things to pay attention to. We've got Fed Chair Powell speaking tomorrow. We've got Fed minutes on Wednesday. And then we wrap up the week with jobs here in Canada and also in the U.S. And of course, the Fed has two main mandates: full employment and price stability. They've been struggling on inflation, but these jobs numbers still matter. Expectations are for a little bit of a downturn in that last month. We had 272,000 this month. It's expected to downshift a little bit to 196,000. Unemployment rate is expected to stay the same at 4%, whereas in Canada, it's expected to go up, the unemployment rate from 6.2 to 6.4%. The U.S. has certainly had a stronger economic environment than a lot of these other international counterparts. Now, you want to trade the markets in front of you. There's just not a lot going on, but I have reason to believe that there might be. So this is the equal weighted S&P chart. This says if all 500 companies were equally valuable and the same market cap, well, you can see we're not trending upward. We're kind of going sideways. But here's the key. You're at the lows, and today we were down almost 1%. Today was a bad market day, even though the indexes were flat. And this shows that most stocks sold off. And if we break support here, it can intensify. And the reason I put Bollinger Bands on here is interesting as well. This is the tightest Bollinger Band squeeze that we've seen in about 5 years on this chart. That's important. When you get these abnormally tight Bollinger Band squeezes, that can lead to an increasing volatility move. And usually the signal is just what's happening here. See how the lower band started to turn down? That lower green line went down. The red line starting to shift up. That's the sign that we're not squeezing anymore. We're actually expanding away. Or in other words, we're no longer in this malaise. It suggests that volatility is starting to pick up. So it's what you use as kind of that signal to signal the end of the consolidation and the start of a volatile move. So if you believe this chart, the key is going to be the break of support. If we break support and the volatility is expanding after a tight Bollinger Band squeeze, one would anticipate lower prices. And I think that's where they'll start to sell tech and we'll get a little bit of a risk-off environment. So that's something that I'm watching for. Until that time, boy, there's just not a lot happening. You realistically could stack, a couple more of these over. Certainly Japanese yen has remained weak. Certainly Aussie has been strong of late. But other than that, there's just not a lot to hang your hat on. So as far as trades, just when the market gives you a lot of pitches to swing at, great. We've got great opportunity, risk, reward, probability. We'll swing at them. Other times, things are just not real clear. Right now, we don't have a real clear picture on a lot of those currencies. So pick your spots, play it a little bit more careful, make sure that you've got a good opportunity with good momentum in front of you. Hope you enjoyed this currency recap. Have a great week and a great holiday, everyone. We'll see you next time.